Hello again from Sprott Money, sprottmoney.com. It's the month of December. It's time for your precious metals update. And these are the projections that we like to talk about with Chris Vermeulen of the technicaltraders.com. Chris comes on every month here early in the month to let you know what he's thinking, where we're headed. And it's always valuable to get his impressions of how the markets are doing. So Chris, good to see you, my friend.
Yeah, always a pleasure, Craig, and happy holidays.
Happy holidays to you. I can't believe we're now only like 3 weeks left in the year, and what a crazy year it has been.
Yep.
And remind everybody, again, Sprott Money, your precious metals dealer, not just in Canada, but U.S. as well, worldwide even. There it is right there on the page. Shop the holiday gift catalog. Give the gift of sound money this year. Yeah, an ounce of silver, maybe a couple grams of gold, whatever. A lot better than a tie or the latest video game. Start teaching your kids, grandkids, and friends about sound money and what it means this holiday season. Again, sprottmoney.com. Go to the Shop Now tab. You see it right there on that page. And do some shopping. Still plenty of time for Santa to crawl down your chimney and bring you some gold and silver. Free delivery and insurance. Anything over $500. So let's get at it. Chris, let's you and I get at it. It's been a heck of a month. Metals fell sharply after the election of Trump, but it seems like some reality now is finally returning again. And now the metals are moving back up. At your business, the technicaltraders.com, you focus on everything, though, however. You always talk about the best asset now. As we sit here on the morning of December the 9th, what is the best asset now?
Yeah, good question. Let's dive right into the chart. So if we take a look at the best assets right now on our hot list, we can see near the top of the list, we've got the ARK ETFs, we've got Bitcoin, blockchain, consumer discretionaries, clean energy, really all of the things that did exceptionally well during the COVID bubble, where everybody was in that kind of feeding frenzy, blow off top in late 2020 and early 2021. And so money's starting to pile back in. Now, they're down today, but overall, that money is moving into these small caps. Of course, when Trump got in, you and I were talking right around that point, and the small cap stock took off huge, up about 6% after Trump got in. And so we're seeing definitely money wanting to go into these growth, high potential companies, and people are really putting risk on. They have FOMO, they're jumping in, which we're seeing in the VIX. The VIX is very low, and as they say, when the VIX is low, it's time to go because people are fearful. So today, as we talk about it, the top performing sectors are all negative pretty sharply today, down 2 to 3%. And we're seeing the defensive plays move higher. We're seeing gold, silver, and miners taking that kind of leadership role in moving higher. So, when we look at the ARK ETFs, they have had a very strong run since this market kind of turned green back in September. We've seen a big move up. Now I think we're starting to see a little bit of the market kind of exhaustion phase. And I think this is that time of year where seasonality-wise, when we look at the SP 500 or the market in general, let me just pull this up. We usually have a pullback. This last month here in December, we see a bit of a pullback kind of right about now where we are. And I think that's what we're starting to see. And it's nice to see stocks pulling back and gold moving up. So I believe we're going to see the precious metal space do very well into the end of the year. And so even if stocks continue to show signs of strength or weakness, I think gold is going to continue to move up because we're in that favorable space. So right now, it's just a sharp pullback in the small cap space, but I still think they're going to go higher into the end of the year.
You like to show that seasonality chart. It seems like about every other month we pull it up. If you've got it handy for gold, please show it again. This is something I wrote about this last week in my weekly article for Sprott. Just go to sprottmoney.com, hit the Insights tab, and scroll down. December and January are the third and second best months of the year. And traditionally for gold, we get a little Santa Claus rally, perhaps. Maybe you can talk about that seasonality for a second.
Yeah, I mean, the seasonality for gold is very bullish right here. As you can see, we're probably right down, at this low. So we should see the next 2 to 3 weeks upside, rising tide environment for gold, silver, and miners. I think we're kind of coming into the end of a major cycle now. I thought the market's been going to top a long time ago, continues to get kicked down the road. I feel like January is going to be very, very important for the overall equities market. And this is at that time in this stage where I think we're going to see precious metals do very well. We're going to see gold more so than silver, and miners perform really well, I think, going into December and January. And I think January is going to be a very difficult month for stocks. I think it's going to be volatile. And as soon as the market becomes volatile, we're going to see gold and silver and miners probably want to continue to move higher and potentially poke to some nominal new highs. I don't think it's going to be a huge rally, but I think we're going to see gold want to move up. And again, that seasonality chart just shows we should see a fairly decent rally for the next 2 months, which is December and January.
Speaking of seasonality, this is the time of year, especially in Canada, where we get this tax loss selling. Usually seems to wrap up by about the 15th, 18th of the month, maybe the 20th. I don't know, depending on when you bought mining shares this year, whether you've got losses or not that you want to realize to place them against your gains. But nonetheless, it's a pretty consistent pattern. So let's start with the GDX as a proxy for that sector, Chris. If we do get this kind of year-end rally, you could certainly see where higher prices in the metals would get people started thinking about the fourth quarter earnings that'll begin in late January, all that kind of stuff. If someone were just simply to follow the GDX and use it as a proxy for the sector, what are some levels people should watch into year-end?
Yeah, so the GDX, let's just, if we take a look at the short-term chart is technically down right now. There's a lot of damage that was done over the past 2 months. It has had a nice little pop and bounce. You could argue here it's built a little bull flag, stuck under the 20-day moving average. Now it's starting that leg up. So I'm starting to get excited about the miner space. We have a rally, a bull flag, and it's starting to move up. So I think it could go up to about this $40 per mark for GDX. It's a whole number. It's about the measured move based on this bull flag pattern. And if we draw a line right across here, you can see it's been a pretty significant pivot area where price has been stuck at it, above it, or below it. So once it gets to that level, if it pauses and pulls back from here and builds another like little launch pad, then I think we've got a series of higher lows, higher highs, and I think it could go back up for a double top, somewhere up to about 44. So there's some pretty good potential. There's 10+% from where it is right now. And even if you were to allow it to build out a more strong pattern and actually confirm this trend is up, it still has about a 10% potential upside into the end of the year, into January. So I like it from that perspective, but right now it is stuck under the 50-day moving average, or flirting with it as you and I are speaking right now, and it's just trying to turn around. But again, we've seen that volume be very favorable. We saw heavy volume selling, people got shaken out, and now we're seeing it move higher. On all the spikes in volume here are green now. So people are accumulating, and on average, volume is kind of fading down, which is a good thing. Volume likes to go up on light volume. And when there's big volume spikes to the upside, that's just showing that there are extra buyers moving in and accumulating positions.
I've noticed that intraday as well, a lot of green daily candles, which means you're closing higher than where you're open. You could be down on the day and still have a green candle because prices rallied during the session, and that's kind of an accumulation as well when we see that. Is that right?
Yeah, for sure.
Okay, so we'll watch that $40 level at least to begin with, or as we go into the end of the year, $40 in GDX. That sound about right?
Yeah, I think it's got potential to work its way back up to about 44. So I think there's quite a bit of upside potential.
Yeah, and again, that's consistent with the pattern. I've seen weeks in GDX like that last week of the year where it goes up 10% in a week. And then that carries over to January. So folks, if you're in the mining shares, keep that calendar in your mind, the seasonality in your mind, and see how things go in these final 3 weeks. Let's look at the metals then specifically. Chris, I don't know, I guess we'll start with gold.
Sure.
Again, came down sharply, shook a lot of folks out. I remember talking to you last month. It seemed like a number of factors contributed to wash gold back. It was a rally in the dollar index, a pullback in the bond market, this kind of get out of gold, get into Bitcoin trade kind of hurt things as well. But, we're starting to recover, make a move on that 50-day moving average. What do you see?
Yeah, I mean, gold has got a very strong chart pattern. You can go back to the monthly chart. It's still in a very strong uptrend. It's bullish. Just on this daily chart, you can see you have these big runs. You have a pause. We've got a big run, and now it's pausing. So this whole consolidation, this whole price action here is very bullish still. Short term, it kind of pulled down. It's actually kind of done what gold miners have done. It's kind of flirting with the 20-day and the 50-day trading sideways. Miners have already broken this high from a little while ago. So miners are leading the way, which is a bullish sign. Generally, we want to see miners break out first of a bullish chart pattern, and then gold will follow. So I definitely feel like this is it's seasonality time, but the characteristics of how gold miners are moving are telling us, hey, gold should move back up. And I think we're going to see it go back up to this 2,800 and maybe even pierce to nominal new highs. Again, we're not only on like a major super cycle kind of cycle where gold should perform really well, no matter if stocks go up or down. I think there's global fear rising. That's why we've seen gold have this massive rally that you and I have talked about a few times on the monthly chart, where it broke out of this huge multi-year pause while every other asset went into a bubble and took off. Now everything is kind of struggling and gold is taking off. So we're in this very strong environment where gold could come up, push to 2,800, maybe a little bit higher as that defensive play. And it doesn't really matter what the stock market does. There'll be bouts of selling where money comes out of aggressive stocks like today and out of Bitcoin, and they go into gold, and then vice versa. But overall, net, we should see gold continue to hold its value and grind its way up. No matter what the market does, I think.
Certainly, it has been a heck of a year. And by finishing strong, I mean, we're going to be pushing 25, maybe even 30% higher on the year, which is one of the best years I can recall.
Yeah, it's pretty good.
And that you would think would serve to add some momentum into January. Let's wrap up, Chris, with silver, because that's a thing that could definitely get some momentum into January. I'm sure a lot of folks, here I send people to the holiday gift guide at Sprott Money. They think, well, okay, is $32 or $33 a good, price for silver? Could it pull back from here and I could save a few bucks? What do you see in the short term? And then we'll get into the long term.
Yeah, I mean, I think we're going to see the precious metal space as a whole kind of do the same thing. Now, silver, when we look at what gold was doing, if I was to draw the kind of gold chart down below, gold's pulled back, it rallied up, and it's kind of trading like right here. Yeah. Gold miners pulled back, they rallied up, and they're already breaking above this high. They're already breaking out. And silver's carved out this bottom. It's already broken this little bottom and this tight bull flag, and it's extending. So silver is actually like leading the charge, and then miners, and then gold. So silver looks really good. Of course, it moves very quickly, and I think we're going to go back up to this 35 range when we look at the monthly chart and get a big picture of where all that could lead to. I think, again, we're going to go back up to these highs that we saw over here around 35.50, 36, somewhere in this range, and pierce these highs. I think all of these precious metal pockets are going to do the same thing, gold, silver, and miners. So I'm expecting another push of $4 maybe to the upside, maybe even a little bit more. Maybe it'll want to push up and break this high and go up to this other candle high around 37.60 somewhere. So again, there's good upside. This is that time of year to I think play it. Not only is the trend up, but all of them are confirming. We got silver, gold, and miners plus seasonality, and it's all these things come together for a pretty nice holiday trade, really.
Yeah. All right. So as we wrap up, I have a hard time finding an annual chart. Do you think you can make an annual chart out of that thing?
Let's see here.
Let's find out, because this is a point I've been.
Here we go.
Looks like it to me. Okay, brother. This is the one I wanted to show everyone. I'm going to have you send me that, if you will, because I need to have that copy of myself going into the end of the year. This is the one I want everybody to see. Chris, you and I talked about it earlier this year, when gold broke out on the monthly chart and then the quarterly chart. It's those long-term charts that get the secularists involved, the generalists, the home offices, the institutions. Yeah, the daily chart gets you and I excited, but it's that long-term stuff is where the big money moves. Well, you see, look at that. That we might be closing in on the highest annual close ever. What do you make of that?
I know. Yeah, it's really exciting. I mean, this pattern kind of over here kind of almost reminds me of the Bitcoin chart pattern, but on the monthly basis, super bullish. So we could draw a few things. Obviously, we've got a huge potential. You could say this is like a massive cup and handle pattern. Over here is we've got this big rally up and this tight bull flag, and now it's breaking out above this high, pointing to much higher pricing. Cup and handle pattern, especially one this big, can lead to pretty explosive moves. They can be 200 to 300 to 400 times the depth of the cup. So if we were to like just take this depth of this cup, depending where you take it, you can like stack it on. And of course it puts silver way, way up there. So the yearly chart is very, very bullish, especially if we close at this highest level ever. That means it's breaking out on a yearly basis. And, yeah, I mean, you can't go wrong. I don't think long-term precious metals are going to be exceptionally well. I love physical metal. I own a lot. I'm hoping we get a pullback next year. Maybe we break out and blow a little higher here for gold and silver. But I am hoping we see a bit of weakness come 2025 when hopefully the markets have a correction across the board in almost all asset classes for that last opportunity. So silver breaks out, and then a pause or small pullback from there will be like the ultimate accumulation point. Or just from this perspective, it's like hop in and anticipate like another 5 or 6 years from now, it should just keep going up as a long-term investment. But it's very bullish. I mean, it's bringing you to like $80 an ounce easy if we were to really see this break and pop.
Pretty remarkable, isn't it? That's, again, so when we're sitting here talking about what are levels to watch, that annual close in 79 and the annual close in 2011 are pretty close to each other by my eye. What can you give an actual number there on those big green candles and those highs? What is that about?
Yeah,
30?
so that's around 31.20, somewhere in there, which we're well above it.
Yeah,
so
we are.
This is a really good sign. And of course, we got really strong volume. We've got strong volume on the downside. The big up bars are all green, right? So people are accumulating. People have been accumulating and stacking silver forever. And this could be like, one of these huge green bars next year where it just blows up and takes off when all hell kind of breaks loose. Which is pretty exciting. So I think it's got a lot of potential from a long-term perspective, and silver is very, very explosive that way.
And you think, again, nobody owns it except kooks like you and I, right?
Nobody owns gold and silver, really. I mean, everybody.
No.
It's such a tiny percentage of portfolios right now. It's like a third,
right.
A third of everybody's percent, not a third of a percent, like not even a percent,
right,
of somebody's portfolio is in this, right? So it's so much. People, once they start moving in, is going to send this parabolic, and once it starts to rally and hits these all-time highs, there's no real sellers up there. Nobody's going to want to sell it, which is what creates that parabolic surge, right? It's just FOMO driving it up, just sucking it up. So
it reminds me, it was a good couple of years ago that the guy from Guggenheim, and I forget his name now because he passed away, unfortunately, but he was at Davos, or whatever the big shindig in Switzerland that's usually in January, and he surprised the CNBC crowd by saying, "Yeah, I think we should get in silver because nobody owns it."
Right.
And again, I think that helped a little bit of a rally back then. But that chart, Chris, in an asset that nobody owns besides us and the people watching, you see that breakout on an annual basis. That's the kind of thing that could drive some real flows of funds next year. So what'd you say, 31.20? Is that what that level was?
31.20. If we close above that, that is like, new all-time high close. And
okay. New Year's Eve, we got 3 weeks to hold on.
Yeah.
And see if we can pull this off.
I think it'll do it. I think we're going to see the metal space do very well for the next few weeks. So
let's do it. All right. So let's make that the first chart we check out when we get back together for the January precious metals projections. That sound like a deal?
Sounds like a deal.
All right, Chris. Merry Christmas, Happy Holidays, Happy New Year, all that kind of stuff.
Yeah.
Thank you we've done 12 of these this year, and they're always very helpful. So thanks for all you do. And again, everybody, Chris at thetechnicaltraders.com if you want some help personally, individually with your trading. Chris is somebody you want to check out. Chris, again, thank you.
Thanks, Craig. Always a pleasure, and happy holidays, everyone.
And from all of us, Sprott Money, sprottmoney.com. More to come still this month, including a special guest. I wonder who that might be. Santa Claus himself? Well, he does have a big white beard now. And he does live in Canada, up north. So you can begin to fill in the blanks, perhaps. Keep an eye on this channel, subscribe, like, whatever, so you're notified should Santa stop by sometime in the next couple of weeks. You're going to want to hear from him. But for now, it's time to go. Again, thank you, Chris. Thanks, everybody, for Sprott Money. And keep an eye on this channel for more content to come in December.